Good afternoon. This is Lance Bryce with Thrive Mortgage. Today is July 28th, Thursday. I hope you're doing well. A lot of information to cover in this short 3-minute phone call. So here we go. Interest rates today, 5.22%. That is a dramatic reduction over last week. Last week we were at 5.69%. So almost a half point reduction week over week in rates. If you go back 6 weeks to just July 13th when we hit our high, we were at 6.11%. Of course, all of these rates are the Mortgage News Daily average of 30-year fixed rate conforming rates. So that's just the national average. Your lender will vary, and every scenario will vary. So call me for specifics of any particular client that you might be working with, and I'll be happy to run numbers for them. Bottom line is, on a $400,000 mortgage in the last 6 weeks, you've seen those monthly payments on that mortgage go down about $225. Not insignificant as far as a borrower's ability to qualify for a bit more house today versus 6 weeks ago. And here's why the bond market is rallying so strongly. You saw the Fed raise 0.75 yesterday, the federal funds rate. It's in addition to the 0.75 that they raised 45 days ago. The reason the bond market likes it is this is in line with expectations. The Fed had communicated at their last meeting that this is what they were going to do. That was priced in, plus a bit of a premium. That bit of a premium is for the possibility that the Fed might have been even more hawkish. Well, when the Fed does what's expected without going beyond, you see the bond market immediately price that possibility back out again. And that's why you've seen a nice rally in bond prices. Add to that, second quarter gross domestic product came in contraction, 0.9% smaller. The economy contracted somewhat in the second quarter. That's in addition to the contraction that we had in the first quarter. So we are by definition in a recession. No matter how much the administration would like to define it otherwise, especially in this election year. Y'all, that is not always a bad thing with regard to housing. We generally see housing do fairly well and interest rates stay fairly low in a recessionary environment. And it certainly is beneficial with regard to helping the rate of inflation that all of us are being slammed by. So to the extent that this is good news for the inflation front, it may well be good news on the housing front as well. At least it is in the short term. Rates are better. Call me. Be happy to run any specific scenarios that you might have. As always, you can reach me online at brycehomeloans.com, or you can call me 210-260-9660. Feel free to forward this video if you see it in your email. Forward that to your clients. There's my Apply Now tab is in there as well, so it makes it easy to refer folks my way. In any event, I hope you find this beneficial. We will talk to you soon. Stay blessed. Stay safe. We'll see you next week.